Hello guys and welcome back to another video. Today I'm going to be covering how we identify a reversal day, how we identify a continuation day, and how do we trade it, get on side, and we're going to go more in depth on daily profiles and how to understand daily profiles. So this is going to be like part 2 of the previous video, so if you haven't watched that, make sure to watch that first as it's building a bit more on those concepts. So first of all, we want to identify a range and some relevant swing points as we went over in the past video, like shown here, where we have a relevant swing at the lows, also presented here for the bearish scenario at the highs. And once we get that close back into the range, we're expecting the next day to expand towards the opposing draw, right? So with that said, how do we want a reversal day to form? We want to see a quick reaction away from that relevant swing we have identified. And what does this look on a lower time frame? So this could be an example of an hourly time frame showing the exact same thing with that where we engage with that relevant swing on the higher time frames, and then we get a fairly quick reaction away from that low. It's almost like price should be in a hurry to get away from that and then get close above the series or single candle that made the low in this case. And on the bearish scenario, we want to see the bearish candles close below this up close candle that took out the relevant swing. And if this was a series of up close candles, we would want to see a close below the lowest one, right? And that's how we identify it. Now we have set the bias for the next day, expecting that we don't reach into the opposing draw at the same day at least. So how do we want to trade continuation days? In this case, where we have a chart that looks like this with a large opposing wick and the close up here, generally going into the next day, we'll take 50% of the opposing wick down here, one that took out the liquidity, and we want to see the daily profile and intraday price action of this stay in respect to the 50% of the wick. So we don't want to see price trade all the way down here to then start expanding. First of all, it wouldn't be ideal and it would have kind of invalidated the level we have. Also, it would trade such a large opposing wick, which is not what we want to see for expansion days, right? And same goes for the bearish scenario here. We would want to see the daily profile develop below this level. And we can see here, once we have that confirmed close down here, and we have the next close, as if we're closing up here, right? And we still have an opposing draw open, which would be up here in this case. Then going into the next day, we take the same, drawing out 50%, but this time of the whole candle, right? We want to see a daily profile, a bullish daily profile, develop above this level. So again, we wouldn't want to see it trade all the way down here for it to expand to the opposing draw, ideally. And the same goes for the bearish scenario, where we would take 50% of this wick going into the next day, and then we would want to have some sort of daily profile develop, either a small, very small opposing wick or this wick, for example, and then look to trade towards the draw we have down here with potentially failure swings, ideally failure swings. Going into daily profiles, I'll be starting by covering the London reversal. It kind of says it in the name, but here we have a London reversal, right? So Asia most likely consolidating, and then we have London engaging some sort of relevant level. Could be an order block or like an hourly swing point or something. And then once we hit that level, we want to see speed away from that, and then a change state of delivery, which would be the close above this series of down close candles in this case. And once we have confirmed that, we can look for entries, continuation entries, right, towards the opposing draw. And then we'd expect New York to expand in the direction that we're looking to trade, right? And the same goes for the bearish here. We would just want price to manipulate and create a protected swing to the upside. Just like on the higher time frames, this is kind of fractal, so we want to use it on the lower time frames as well, right? And then we'd expect New York to expand to the downside. With that said, we have New York reversal here, which would look a bit the same, just where we have Asia and London either making an opposing run. So if we open up here, we make a small opposing run, or just consolidating basically. Because we want a clear point to trade away from, right? And we don't have that here because, it's just consolidating. We're creating a bunch of failure swings here. So once we engage this level we have marked out, we want to see, again, speed away from that level. And then once we have that confirmed change state of delivery, can either take that if the risk to reward is fine, or you can look for a continuation entry to the draw we have. And one key point in this is, again, we want a very small opposing wick on the daily and the higher time frames, because we don't want the large opposing wicks. Let's say the ADR, which is the average daily range, is around 350 points on NASDAQ, I believe, at the moment. We don't want like a 200 point opposing wick, right? Because then the daily range is already a bit exhausted. And the same goes for the bearish example shown over here. So now I'll be going into a few examples from the charts on TradingView and explain how it's used in the real world. All right, we're hopping into TradingView now, and in the first example I'll show you an example of a London reversal taking place on NASDAQ NQ on the 3rd of June and how we could have gotten on side with that. So dropping into the daily, we see that we tap into this daily order block. I will just write that here. So we have this daily order block as a point of interest. We can see we have a new week open here on Monday as well. So we want to see what is Monday doing, right? And we can see that Monday tap into this as well. You can see it here on the hourly as well. And then we close near the highs, actually at the highs. So that kind of sets the bias for the next day. We're looking to trade towards this high. Not expecting to get there in one day, but as it's 330 points away, it's potential, but just looking for longs the next day. If we can stay in respect to this level, 50% of the previous day's candle, like we just talked about. So dropping into an hourly, I will just play it forward. So usually I look for reversal signatures on the 15-minute or 30-minute intraday. Unless we get to New York, then I'll usually drop to a bit of a lower time frame, just due to the volatility, since it's moving a lot quicker after open. So with that said, we're looking to trade away from a protected swing. We can see here that we have failure swings. We don't have any SMTs with ES either. So we're looking for this to get out, to get run out, and for some potential change state of delivery. So we're just waiting here. We can see we have another sweep here. So that would mark, this would be the change state of delivery then. The down close candles, the series of down close candles that took out the low. And we're looking to get that close above, right? Then potentially you could long here. It's a bit aggressive, but we have the confirmation. Personally, I look for a continuation signature, which would be this one in this case. So looking to get on side near the close here. If the risk to reward is favorable, put my stop at the lows and then target, this would most likely be the first target, which would be previous day high. With that said, you can also use, I believe we had another, this if you want. So these down close candles, they have a bit of a wider range, which is generally preferred. But with that said, they both work out. We never return back to either of these, the lows of the down close candles here. So once we get on side here, we're really looking for this as a minimum target. So just waiting and letting price do its thing, getting closer to New York Open. So seeing here, 930 comes in, we sweep here, we would scale most likely most of the position, and then you could trail your stop up to the lows of this down close candle, especially after seeing 930 respect the lows of these. And then anything behind that would just be managing your position and scaling out along the way. Obviously we get a move that goes way beyond previous day high, but that's also what we're expecting, right? And then I think we get some sort of retracement, but you would just scale along the way. Most likely take most of your position off here, which would be around the 3.8 hour, which is great if you ask me. So that would be the first example of a London reversal on Nasdaq. So this would be an example of a New York reversal on ES on the 12th of March. So looking at the daily, we can see that we have a pretty clear swing point right below, which is what we use as a draw. So going into this day, I would expect to trade down to this most likely. So we'll see what the intraday price action has to do. It has to say we also have failure swings up here, which is not something we ideally want to be trading away from when we look at the hourly. So we'll see how price acts. We can see that we're going not really anywhere. And here at 8, I believe it's at news, 8:30. Yeah, we have a spike through previous day high. So for these shorts to be valid, we would want to see this high stay intact. There would be no reason to come up here again, since we manipulated this previous day high, and would want to see a confirmation for that downside. So here we can drop into a bit of a lower time frame, 15 and 5 minute, coming closer to New York. Not really giving any reversal signs at the moment. We would want to see a close below this series of up close candles, right, that made the high. So we're just waiting to see if we can get a close down there. If not, it's most likely not going to be an actionable day. So waiting, seeing how 930 comes in. Just going to mark out 930, which is a pretty key level. Volatility coming in. 930 coming in. We get that close below at 945. Obviously, we're not going to enter here. That would mean we would have to put our stop all the way up here, which is almost 30 points. On ES, that's a pretty large stop. So we're just looking for a continuation to see if that can form. There we have an opposing close candle. We would want the close below, which is what we actually get here. And it has a decent range as well. Tapping into these opposing close candles, which is lovely to see. So here we would enter on the open of the next candle, which would be right here with the stop at the highs. And then first target would be, this is the intraday lows. And it's also failure swings in accordance to this. So we would most likely target this as a first target, which is around 2.3 R, and then potentially look towards this low, which is also right next to our draw. So with that said, let's see how it works out. And there's the first target hit, right? So we would most likely scale most of a position here and let the rest run to these lows and just manage it throughout the way. So you could trail your stop here, and then you would scale more out into this weakness, and it ends up coming back on us, right? So it did not go all the way back down here, but with that bias we had and waiting for that confirmation, just using opposing close candles, we still get a very good trade, which you had the opportunity to scale at almost 4R, right? Just taking partials along the way and scaling into weakness on a short. So with that said, most of the ideal reversal signatures on the daily profile is actually London and Asia reversals. So London and Asia putting in the low of day for continuation days to the upside, and vice versa to the downside. It's very rare that you see New York put in the high or low on continuation days. So with that said, this is going to be the end of this video. So let me know what you want to see next. And make sure to join my free Discord, where I'll be sharing a lot of outlooks and my trades and explaining why I took the trades I did. Thank you guys for watching.